Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California, DBO 1666881.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, well, welcome to Mortgage Mom Radio. I am Debbie Marcoux, and as always, I've got Heidi Schlegelpoints coming from Mesa, Arizona with us.
How you doing?
Good.
Good.
Yeah, so it's Wednesday. Oh, my goodness. Like, number one, not having to be at the office on Monday really throws you off. So yesterday, everybody asked me questions on Monday, and I kept saying, you know, we're off for the holiday. We'll get back to you tomorrow. We'll have everything ready for you Monday or Tuesday. Not,
Right.
you know, like you're so off. You're like, oh my goodness. So today's already Wednesday, and we're only here a day, right? And you're like, oh my God, it's Wednesday. What are we doing? So it's been a little flustering today.
To say the least, I felt like I was pulling my hair out and turning my head in every different direction all at the same time.
Yeah, it's like you miss one day of work and it feels like 7, right? Like,
Oh, absolutely.
it's nuts. What's going on, Matt? You're staring at me.
And Lori and Erica both say hello.
Hello, Aunt Lori and Erica. Thank you so much for watching. I love that my family gets online every single week. It is my favorite thing. And I really wish that we could get more people that are listening on Saturday morning by radio to get tuned in live live at 5 on Wednesday. You guys can tell I'm a little flustered today. I'm not doing great.
It's been an off day.
It's been a little bit of an off day. I mean, let me just tell you, we started with the computer completely crashing, like blue screen of death.
Yeah, multiple times.
And everything that the Dell IT people told us to do was not working. And so I'm like, I have to record a workshop. We've got a show. We have no computer. Heidi's texting me, what are we doing with this loan? And I'm going, I don't even know what you're talking about right now.
You should have seen the look on my face when he suggested wiping the entire computer. And I'm like, we're starting over.
Uh-huh. Yeah. Everything that was saved, everything that was done would have been gone, back to scratch. We're like, no, there's got to be another way.
I would have just hung up on them and been like, no, you're wrong.
Yeah. Yeah, that's not really an option when it won't even turn on, you know?
Right.
So it was a fun day. It took us a little bit of work to get here to the show live at 5 on Wednesday on YouTube and Facebook. So for everybody watching, thank you so much for tuning in. If you're there, let us know, say hi, put something in the chat. And if you have any questions whatsoever, we want to make sure that you guys ask us. That's what this show is all about. It's all about education. It's all about advice. We're wanting to bring you guys the information that you need. We're wanting to help people that are on the fence to get off of it, whether that's a purchase or a refinance. It's important that you're doing something. And today, actually, so we've got the workshop going. Like I said, I had to get that done, right? That was really important because we're focusing on this workshop here at the beginning of the year. And so I had to get my workshop started, right? Today is, we're talking about loan programs. We're into that segment. It's going to be quite a few weeks of loan program. And today was VA, right? So I wanted to make sure that I got that done. Anybody that's listening that's thinking, hey, I'm a vet, I'm National Guard, I'm active duty, you know, you've got that benefit. So this is really good to tune in and listen to. And next week's going to be FHA, and the week after that, conventional. We're going to hit some USDA, jumbo, and even the bank statement program. So we've got a lot of programs to talk about. If there's one that I have not mentioned and you'd like to hear about it, please mention it. We've got many, many weeks of recording to come. So there's more than enough time to slide in another program that you might feel other people want to hear about or that you've heard about, or maybe you don't know what it is and, you know, you want to ask, and then we can let you know if it's something that we do. So definitely, I think this is great, but it was a little bit of a trying day, I'm going to say.
Yeah. I just, I'm still like calming down from the craziness from today. I had questions being thrown at me left, right, and sideways, and I was trying to get all the new loans coming in reviewed. And I just felt like, how is it Wednesday? I'm not ready.
Right.
And I'm so far behind and I don't even know how, but you're right. You take one holiday and it feels like I'm a week behind.
Yeah. Oh yeah. Yeah.
Oh.
It was pretty amazing. And then, we've had everybody that is listening to us from, Southern California. We've had winds that have just been absolutely outrageous the last couple of days. I mean, horrendous. And all day yesterday and all day today, we've had helicopters flying over the top of the office because they're dropping water on, a fire. And, my son didn't show up to work this morning to do schoolwork. So Mikey's back at he's got to come in and do schoolwork. And he didn't show up this morning. It's because they lost power, gone. And his phone died before he could set an alarm. And then the power didn't come back on until 3 a.m. I talked to Lori, our friend Lori, Heidi, and they lost power at 3 a.m. yesterday morning, and they have not gotten it back yet. So, it's been a couple of days that have been pretty rough. And then on top of that, there's a holiday, and then we come back and we're working, and then we get the blue screen of death on the computer. So we're a little flustered today. You guys will kind of see it in the presentation that I did in the workshop that we're going to put on for you. But, I still get you some really great information. It's all about VA. It is really important. I talk about how do we decide which loan program is best for you. And that's for anybody, whether a vet or not, to kind of figure out how do they say whether we should do FHA or conventional, or what are they looking at? Why? Right? So I do go into that a little bit. So, bear with me though. I was a little flustered.
Over on Facebook, Patty says hi.
Hi, Patty. Thank you so much for watching. If you've got any questions for us at all, please go ahead and put those into the feed. We will definitely read them out loud and answer them for you. But thank you very, very much. We appreciate it. And so what do you think? You got anything you want to say, Heidi, before we get this rolling?
My husband started working for us.
He did. I'm so excited. We got Jeremy on board now. He is now number 9 with the Mortgage Mom radio team. I love it. I don't know what we're going to do when we go into the double digits on the extensions. I'm not sure how we're going to make that work, but we'll make it.
Right.
He's been
figure it
great,
out.
though. He's only been there a day, and he's already, I'm like, make me a file. He's like, done.
Yeah.
Label this.
2 days.
Done.
Today is day 2.
I love it.
Finally got all his equipment in. So he is working on 3 screens.
Love it.
Trying
Love
to
it.
figure that out.
Yep.
Yeah.
Yeah.
But he's doing good. And at the end of today, he goes, "So am I irritating you yet?" I was like, no, we're good.
Nah, you had to train Manny. If you can do that, you can do anything.
Nope, but he's loving it, so it's great.
That's
He's
awesome.
Super excited and happy, and can't wait to be perfect at it because Jeremy.
Right. Oh no, he's got to be perfect. I love it.
Yep.
I absolutely
Finished
love
carpenter by trade, so there's no room for error. But
Absolutely
it's been
not.
fun.
I love it. So one thing, and we're going to get into this workshop here in a second, and then we'll obviously, but this is catching up with mom, right? This is our catching up with mom time. So I was actually thinking about this earlier today, and I was thinking, I really want to do a show where I get my mom on, and then I can get Carrie's mom on, because I know Carrie grew up where her mom was in the business too, and then I started thinking about you. And I'm like, she doesn't have anybody that was in the business. How in the world did you get into mortgage? I mean, I know how I did, right? My parents were in real estate growing up. My mom was in mortgage. And, before I could even ever remember, I knew how much equity I had in my house. And I shouldn't have known that at 8 years old. But where did you come from? How did you get here, Heidi? That's what I want to know.
I kind of had a mom in the mortgage world. I had my mother-in-law, so Christopher's dad's mom.
Okay.
Was in mortgage forever, and she got me into mortgage. So she worked at Wells Fargo when we did, and she got me into mortgage. So I knew nothing about it, and she had someone that was looking for a very strong personality to work with.
I think you gave them that.
Right. Work with a very strong personality loan officer that did reverse mortgage. And he had been through 6 assistants in less than 3 months.
Oh, wow. Yeah. Well, you can handle that. I could see that.
Yeah, I wasn't sure if she loved me or hated me
at
that time. And I did the interview, and pretty much the rest is history.
Right.
So, I've got a great relationship with her, and she's retired now. But yeah, she taught me the business.
That makes sense. All right. I was wondering, and I as you're talking about, I'm going, okay, wait a minute. We've talked about this before, right? But, it's one thing when you actually grow up in it and all you're hearing, I mean, come on, I'm going to totally date myself, right? minus the pigtails today. But,
Right.
I'm going to totally date myself, but you go back to the pagers and they're constantly going off and your parents are pulling off to the side of the road to get to a payphone to call somebody back. And then lo and behold, all of a sudden the bag phone was out so they could carry the bag with them
Yes.
wherever it was that we went. And then all of a sudden, then there was the big, huge brick block, car phone that finally
Yep.
came into play, but it was still pagers. Pagers were still a big deal. And so, it was just kind of, but me, ever since I've been very, very little, every single conversation at every dinner that we had was something real estate. So I was just, I thought that'd be kind of fun. I'm sure Carrie probably had to deal with the same thing. And we
I'm
could
sure.
probably have some really fun stories between my mom, and her and me. But then that's what got me to you. And I'm like, I don't remember. It is a very interesting business and it's a lot to learn. And usually somebody that has been in it that gets you into it. It's not something that you wake up one day as a little kid and you're like, I want to be a loan officer.
Right.
Hey, over on YouTube, Houseboat Billy is back.
Houseboat Billy, we haven't seen you in weeks, buddy. We've been talking about you. We missed you.
He says, hello, ladies.
I love it. Thank you so much for watching us as always. But yeah, we've totally missed you. We've talked about you quite a few times. So it's good to see you back. Good to see you back.
But he got lost.
Right? We did. We thought he fell off that houseboat. Had a couple too
Right.
many on the weekend, and all of a sudden he was gone, swimming with the fishes. All right, so let's get into this workshop. Today's all about VA, and then obviously we're going to touch on all kinds of things as well. So even if this is not something that's suited for you, again, I'm going to talk about how do we figure out what loan program is suited for you, because you still got to figure that out. We're going to talk about the VA loan program so that you know what your benefits are of that program. And then when we get back, me and Heidi will talk about some more other things that obviously anybody else listening that doesn't have that benefit can benefit from. So let's get this rolling, huh?
Sounds good.
All right. All right, well, welcome to Mortgage Mom Radio. This is my Homebuyer Workshop, and this is unit number 3. So what are we going to be talking about today? Well, we're going to go through the VA loan program, and we're going to just kind of hit it. What do you need to do? What's going to help you get there? We're going to go through a couple of things in between. But if you like these videos, you find them educational, please hit that like button, hit the subscribe. Make sure you guys turn on the all bells so that you know when we do upload the next video, when we go live Wednesdays at 5. We want you to be able to follow us, watch them with us, ask us questions, and we're going to get those answered for you. So the very first thing that we want to talk about, if I can get my clicker to work, is, let's see, here we go. All right, so text MOM to 36260. That is how you're going to get our phone app, and it's going to give you everything that you need to have at the tip of your fingers for trying to find a new home and even refinancing. So when you do go to that calculator button, there will be an option for purchase, refinance, or affordability, which is going to give you a little bit of an idea what you can or cannot qualify for. What you see in affordability, if you do run that calculator, will be a little bit different than what we do with you when we take the application. We can usually push you to a higher limit than what you would see on this calculator. It is pretty conservative, but it gives you a great idea. Purchase, refinance, you guys want to know how much money can I save every month if I refinance, or what does that payment look like on that house that I just saw on Redfin? It's going to give you all that information based on the loan program that you decide is best for you. So we're going to go ahead and we're going to get into those loan programs. But if you want to know how to contact us, it's all up on the screen right now. So you guys can text the word MOM to 36260 to get that phone app. Follow us on Facebook. Watch us on YouTube. All you got to do is search Mortgage Mom Radio in anywhere at all that you go, and you're going to find us. You can call us, as always, at 844-935-3634. And if you want to see what other people have said about us, go to Yelp and check it out. If you guys enjoy these videos and you really you want us to keep doing them, give us a Yelp review. We'd really appreciate that. That helps us out a lot. But again, if you guys can, please put a thumbs up on this video, subscribe to the channel, and share it. The more that we can get in our algorithm to get out there, the more people that we can help. So we're going to go ahead and jump into loan programs, and today's loan program that we're going to focus on is going to be VA. Next week, we're going to do conventional, and we'll go through all of the different programs. Jumbo, bank statement, USDA, we're going to hit them all. So make sure you continue to follow us week after week to get all of the information. So the first thing that you can see up on the screen watching the PowerPoint with me right now is what are we going to do to try to figure out what loan program works best for you? So we're going to consider your budget. You know, what's a comfortable monthly payment for you? Where do you want to be? Are you a home? Are you looking at buying this as an investment property? Are you looking at buying this to live in it? How is your tax basis going to change? So once you own a house, like we talked about in our last workshop, you know, benefits of homeownership, you're going to get to write off that mortgage interest. You're going to get to write off those property taxes. So that means you're going to be able to spend a little bit more per month because what you're going to either owe or get back in a refund will either be less or bigger. So, you know, we can talk about how will your tax basis change. You can talk to your CPA. We can give you numbers. What can or can't you do? Another great part of considering what your budget is and whether this is a good idea to buy a home is to use some rent versus own calculators. And you can find those, just type them into Google. They're all over the place. Realtor.com's got a great one, but it'll show you the difference between what you're paying in rent and if you own something, what would you pay there and what is the difference? Where's your equity after so many years, etc. So definitely consider your budget when determining which loan program works best for you. How much money do you have available for down payment? You know, all of that good stuff. So how are we going to actually determine which program that we're going to put you in? VA, FHA, USDA, conventional. All of that is going to be based on what is your credit score. We're going to take your middle one. And if there's two of you, we're going to take the lowest middle. So everybody out there knows there are 3 credit bureaus. There's TransUnion, Equifax, and Experian. And we are going to run all 3 bureaus for every borrower on the loan. We are going to take the lowest middle score, and that is what we're going to use for qualifying purposes. So if your credit score is a little bit lower and you've got a low down payment, you're not a veteran, we're going to probably talk to you about FHA. If your credit score is really high and you've got a low down payment and you're not a veteran, we're going to talk to you about conventional. If you're a veteran, we're going to talk about a VA loan if you've got very little down. If you've got a large down payment, 20% down, 25, 30% down, we're going to talk about conventional. We may not talk about VA. That might not be your best bet, even if you are a veteran. So all of the things that are on my screen, and again, if you guys are listening to me on Saturday morning and you're hearing this piece of the show, go to YouTube and check it out. You guys can see the PowerPoint. You can see me do it. You can absorb a little bit more by being able to read it and hear it at the same time. But we're going to go through what is your credit score. Mortgage insurance, you know, is based on your credit score. And, you know, where is it going to be less expensive? If you've got a little bit lower credit score, FHA is going to have a little bit better mortgage insurance monthly than if you have a high credit score with conventional. Conventional, a low credit score is going to give you higher mortgage insurance. So again, we're going to try to figure out what works best for your needs. Jumbo financing requires a much higher credit score. So, you know, if you could possibly qualify for jumbo, but we could squeeze you into conventional and your credit score is a little bit lower, we're going to try to go ahead and squeeze you into that conventional loan because you're going to do better than you would on a jumbo. And then obviously, you know, is it possible to quickly increase your score to allow for different options? That is something that we can also talk to you about. So credit repair is definitely part of which loan program do you qualify for? How long do you want to wait to buy your home? Do you have some time to do some quick fixes that we can get that credit score up and get you into a different loan program? Your down payment, like I mentioned earlier, if you've got low down payments, large down payments, if you're using a gift for the down payment, if your employer is going to give you a loan for the down payment, are you going to borrow against your 401k? All of these things are going to determine which loan program works best for you. So truly to know exactly what program that you need or what's going to work best or what your options are, the best thing to do is to call us, get on the calendar, let's talk, let's go through you, let's discuss what you've got going on, what is your situation, and then we're going to talk about all the different loan programs and then which one seems to be your very best fit. So again, reach out to us. We're here to help. If you've got that handy phone app, like I told you to, you can email me from it. You can call me from it. If you want to give the office a call, you can call us. You want to put a question right into the feed, you guys can do that. You're going to get your answers, but get on the calendar. Talk to me or somebody on the team. Let's go through your scenario and figure out what works best for you. But today we are focusing on VA, and we want to go through what those benefits are of VA. Anybody that is out there that is active, National Guard, a veteran, you guys all have VA eligibility, and you can buy a home with your VA loan. And it is really a great loan. It is zero down payment. So if you want to buy a home, you can literally get in with zero down. That's at any loan limit. There are no loan limits on a VA loan. All conforming loans, conventional loans have a loan limit. All FHA loans have a loan limit. VA is the only loan program that has no loan limit. Now, that doesn't mean that anybody gets to qualify for any sales price and loan amount that they want. You still have to qualify. There's debt to income ratios and things that we have to look at and make sure that you can qualify to pay your loan back. But you are not actually stuck to a loan limit. So if you're looking in a county that has a lower loan limit than another county might, that you're not constricted with VA. We can absolutely get you in with zero down, and there is no loan limit. So keep that in mind. There is no mortgage insurance on a VA loan, which is fantastic. There is no loan program out there that I am aware of that is a zero down with no mortgage insurance except USDA. That is the only other loan program that does not have monthly mortgage insurance. So that is another great benefit of your VA financing. So this is old. I didn't update this, so we're going to scratch that and pretend like we don't see it, where it says loan size up to $1 million. That was actually all the way through to 2019. At the beginning of 2020 is when they changed it and said that there are no loan limits. So scratch that, ignore it. That's wrong. I forgot to take it out of my PowerPoint. There is no loan limit on a VA loan. Lower credit score requirements. You guys, VA loans are really great. They're good to you. They leave you room. If you've got some credit damage, a lot of times it's okay. We can go down as low as a 580 credit score on a VA loan. So if you were thinking, my credit's just not very good, I don't think I can get a loan. You know what? There's a really good chance with a VA loan, if you have that eligibility, that we can get you into one. So don't let that restrict you. Obviously, the higher that your credit score is, the better that the interest rate will be that you will get for your loan. Your interest rate is based on your credit score. So we want to get your credit score up. We want to help you get your credit score up if you are in that lower range. But it's absolutely not a no, even if you've got a little bit of, a little trouble with the credit report. So you want to call us and talk to us about it and see what we can do for you. All right, so lower interest rates. VA loans have very, very good interest rates, and historically, government loans, both VA and FHA, have had lower interest rates than conventional jumbo USDA loans have had. Now, believe it or not, a USDA loan is actually a government loan, but it follows more of the underwriting guidelines of a conventional. So it's kind of this weird little hybrid character, but we'll get into USDA on another day and on another slide. So, but lower interest rates, really you get a fantastic interest rate, zero down, no mortgage insurance, no loan limit, and lower credit score requirements. So guys, a VA loan is absolutely fantastic. If you don't own a loan, or if you don't own a home today, and you're a veteran, you're active duty, or you're National Guard, reach out to us. Let us talk to you about getting you into homeownership, buying a home, and being able to secure your future. We talked all about it. If you missed the videos from the previous weeks, go back and watch them. There's the benefits of homeownership and everything about that, the security, and just the peace of mind that it's your home and nobody can kick you out. So big thing. Now, with a VA, we can also talk about VA. We're talking about VA home loans. This is not just for buyers. VA home loans are good for refinances as well. You can do a refinance. You can cash out your mortgage. You can go up to almost 100% and get money out. You can't do that on any other loan program. So if you, again, have the eligibility for the VA loan and you've been thinking you might want to do some home improvements to the house, give us a call. We can talk to you about a refinance to get that cash out. We've got the VA IRRL is what they call it. It is the IRRRL. It is 3 R's. But it is your interest rate reduction refinance loan. That's what that stands for. That loan program is awesome. We do not have to get any pay stubs, no W-2s. We literally take your application. We run your credit report. We price the loan based on credit, and we lower your interest rate, drop your mortgage payment, and send you out loan documents to sign. So if you don't need any cash out, but you've got a little bit higher interest rate, and you've been thinking that you want to do a refinance, and you've got a VA loan today already, a VA IRRRL is totally awesome. So it's something that you should definitely give us a call and consider. And especially when interest rates are in, just under 3, just above 3, depending on your loan size. If you're anywhere 3.5% or above, you should definitely be giving us a call and discussing that loan program. It's fantastic. And for somebody buying a house with their VA, remember that VA IRRRL will be there and available to you if you do ever want to refinance in the future. So you do have a funding fee, and this is something that we've talked about in the past, and I'll talk about it again. With all VA loans, you do have a funding fee. That funding fee is waived if you are considered at least 10% or more disabled with the VA. So if the VA has considered you disabled by 10% or more, then you will not pay the funding fee. And people say, well, what is the funding fee and why? And when I first started this, I said, maybe if you have a large down payment, even if you have VA eligibility, we may talk to you about a conventional loan. Well, why is that? Well, if you have 20% down, you're not going to pay for mortgage insurance on a conventional. If you're not considered disabled with the VA, you would still pay the funding fee. So it is a fee that we can get rid of by going to a conventional loan versus a VA loan. If you are considered disabled and there is no funding fee and you have 20% down payment, we're literally just going to look at which loan program is going to give you the best interest rate that day. And at the end of the day, the payment's the same, the rate's the same, the loan amount is the same. So again, it's all about you and what's best for you. And we're going to make sure that we're putting you into the right loan program. So just because you have VA eligibility doesn't necessarily mean that that is the best program for you. But I'm going to tell you, it's a pretty spectacular program. So let's talk about the funding fee, because what is it and why is it there? So basically, almost every loan, again, other than USDA, which they don't call it a funding fee, but it's just about the same thing. Every single loan, if you don't have at least 20% equity, either in the home at the time of refinancing or as a down payment at the time of purchase, you will have mortgage insurance. And mortgage insurance is an added cost monthly that you pay to insure the lender against default. That's just basically what mortgage insurance is. So with a VA loan, they don't charge you that monthly mortgage insurance fee. What they do instead is they have their VA funding fee, and that is going to be financed. So the cost of the VA funding fee is not going to come out of pocket, but you are going to finance that fee, and it will go on top of your loan amount. So if you buy a house for $500,000 and you get a loan for $500,000, or you want to finance 100% of that loan amount or that sales price, we are going to have a funding fee that is going to go on top of that $500,000 that is also going to be financed. So you're going to actually end up financing more than 100% of your sales price. So again, the funding fee does depend on whether or not you have used your VA loan before or whether you've never used it at all. First-time funding fee is less expensive than a subsequent use or using it a second or third or fourth time. Those funding fees will be more expensive than if it is the first time that you are using your benefit. And again, we'll go through those with you, but there is a funding fee. It can be waived, so definitely something to make sure that you mention when you call us so that we are running those numbers accurately. In that phone app and with that calculator, it does ask you if you are disabled, so make sure that you answer that question accurately so that it is calculating the monthly payment based on the right loan amount. But that is what your funding fee is for. It is basically wiping mortgage insurance, and at the end of the day, if you actually do the calculations on it, it is still less expensive than what it is for a monthly mortgage insurance payment on a conventional loan. So, again, something that we can absolutely talk about more in depth and detail if you want to. And, all you got to do is give us a call. So it's 844-935-3634. You guys can find us anywhere. Go to Google, search Mortgage Mom Radio. Go to YouTube. Go to Facebook. Go to Yelp. Anywhere you put Mortgage Mom Radio, and don't forget the radio, you're going to find us. You guys want to get that handy-dandy phone app? Text us, text the word MOM to 36260. And if you have any questions at all that I did not answer today, there is something that you want to know or that you've heard about with a VA loan, all you have to do is call or reach out and we will answer those questions. And if you're following us Wednesdays live at 5, those are great questions to put into the feed. Matt's going to answer those questions out loud. We're going to answer them for you right there and then. And then you get to hear the question and get to hear our answer again on Saturday morning on radio. So why not? All right. So last thing is reduced closing costs. And this is a big thing with a VA loan. Me, Mortgage Mom Radio, and Movement Mortgage, the company that I work for, we do not charge our veterans or our active duty or National Guard. We do not charge you guys normal origination fees. And we're going to get into origination fees when we get into the closing cost section of this workshop. So make sure you guys do stay tuned. Make sure you guys have subscribed to the channel, turned on all the notification bells, so that when we get to closing costs, you guys know that that has been uploaded and that video is there. But normal origination fees, and I'm not talking about points, I'm not talking about buying down rates or loan points or anything that you've ever heard. I'm talking about origination cost. What is that? We've got underwriters, there's an underwriting fee. We've got processors, there's a processing fee. They're the normal fees that happen that it costs a company to do your loan. And that typically runs anywhere, depending on the mortgage company, from about $1,400 to anywhere as high as $2,000. We do not charge that to our VA loans. We actually completely waive that fee. That is our thank you to you for what you have done for either currently serving or having served our country. So you will end up with lower closing costs on a VA loan than you will have on any other loan program. So keep that in mind. It is not something that every mortgage company does, but it is something that me and Movement Mortgage that I work for have decided that we want to honor our veterans with. So I believe that that is the last piece of the slide. Oh, there's one more. Look at that. It keeps going. Keeps going. There's such great information. And Matt, I'm so afraid to click the button and it's going to go to the next screen that I don't know where it ends. So assumable. This is actually one really cool thing for you guys to know. So VA loans are assumable. If you have a VA loan and you decide you want to sell your house and you don't want to go buy another house and use another VA loan, so obviously you can only have so much money outstanding with VA at a time. You'll hear a lot of people tell you that you can only have one VA loan at any given time, and that's actually not true. You can have multiple VA loans outstanding at one time, but you are limited to the amount of financing that you can have outstanding at any given point in time. So if you want to sell your house and or you want to go buy another home, a lot of times there's not going to be enough money left for you to be able to go buy what you want, which means you've got to get out of the VA loan that you have and you've got to pay it off. But if you are ever in a situation where you don't need another VA loan and you've got a buyer that comes in and wants to assume the mortgage that you have on your loan, they can. And that's actually a huge thing. That is not something that you see on very many loan programs. So very, very beneficial to you. And I'll tell you why. Interest rates are super low right now. Next year, the year after, 10 years from now, we may never see these interest rates again. If you have an interest rate that is very attractive to somebody that they cannot go out and get and, themselves, they may very well want to assume your loan. Well, the market's not very hot. It's a buyer's market. There's a ton of listings. You might be more desirable and sell your home faster if you can offer to a buyer to assume your loan. So last piece of the puzzle for the VA, that's all the information I'm going to give you right now today. But if you have any questions, again, like I said, put it in the feed. We're going to read those out loud. We're going to answer them for you. If you weren't watching us do this live on Wednesday, please make sure that you guys do tune into YouTube. In my mind, I'm thinking Yelp. Why and why? But tune into YouTube, subscribe to the channel, click that notification bell, make sure you turn it on all. Please like the video. We really appreciate that. We're going to keep them coming at you. And I'm going to turn the slide. Oh, look at that. There's one more. 100% cash out refi, but I already said that one, so we're okay. All right, so we're at the next slide. Next week, we're going to start on FHA. That's what we're going to pick up again next week. And we hope that you guys all enjoyed this. So again, how do you get a hold of us? You want to talk about it some more? It's 844-935-3634, and we'll be back next week. All right, well, welcome back, and thank you so much, you guys. I'm so sorry about the sound. If you're listening on Saturday morning, the sound will be fine. We actually recorded, we record to the recorder, and then we record the video. And with our blue screen of death today on the computer and all of the hours that it took just to get the thing functioning to be able to do this show tonight, we obviously didn't fix something. So we've got a little bit of work to do. But Heidi, again, you don't really get to see me do these. You're not here. You're in Arizona. And I just tell you I'm recording a workshop and then we're going to talk about it. So you have to actually watch it when everybody else does. So do you have anything that you want to say? Anything I didn't answer? Anything you want to put in?
So you know what? I think my favorite thing about the VA loans is they're assumable.
Yep.
And I don't know if any other loan type is assumable anymore.
They are, but they typically have to be an adjustable in order to be assumable. So if it's a fixed rate, typically on the majority of loan programs, they are not assumable. So it has to be an adjustable, where the VA, it's actually assumable even on a fixed rate.
Okay. So, and I don't know if people really understand the huge benefit of that. And I do, because my first loan was assumable a very long time ago. So
You're aging yourself, girl.
I am. And, you know, I was very young and I was able to get an incredible rate, which was not available. And had I not been able to assume a loan from someone that had owned the property for 15 years already and had an incredible rate, I would not have qualified.
Right.
In all honesty, right? I was 18 years old. I had great credit, but I didn't make very much money. And I wasn't putting a lot down to him to take over his condo. So it was a huge benefit. And the only way I qualified was to take over a rate back then, which was unheard of, right? It was 98.
Yep. Well,
and you know, I got his 2+% rate.
Right.
Which wasn't available back then.
Oh no, it's huge. I mean, we've been in a market recently where property values are going up, interest rates are coming down. This is not a typical market. This is not something that over the long term, over the long haul that we've seen. You know, I started me personally back in 1994, and I saw what happened to property values after our earthquake hit. And we were upside down in homes, and people were trying to sell their home and do a short sale, or they were foreclosing because they couldn't, you know, property values just literally dumped. And that can happen anywhere. That's not just California. That's not just earthquake season, right? That can happen anywhere. We went through 07, 08, 09, 2010, where people were upside down horribly and couldn't get their home sold, and they were foreclosing or short selling. And, you know, when you've got an assumable loan and maybe you've got somebody that it might be a little bit difficult to qualify on their own. Maybe they don't have that down payment that's necessary. If they can at least qualify for the mortgage payment itself, they can assume that loan, they can buy that house, and you get to walk away and somebody took it over, and they're going to take that house off your hands for more money than what it's worth because it's their only way available to buy. So it literally does open up a lot of possibility for you. I mean, it's a great feature of the program. It truly is. And a lot of people don't realize how important that assumable piece is. And obviously, if you're not a vet, so sorry, you better get an adjustable rate mortgage, but not today because rates are so low. Why would you do that? But, you know, it's just one of those things that it really is something that was very beneficial that I wanted to make sure that I put into that presentation, because you don't realize how beneficial that is until you're faced with a market where, you know, maybe you do need that as a sales piece to get out of your home, right?
Right.
So
it makes you more competitive in the market when you're going to sell.
Right. Absolutely.
We've got a few messages over on Facebook. Helen says, hello, and oh no, I missed it.
Oh, no. Well, Helen, you can go back. It's okay. You can either watch it on Facebook. When it's over, it'll bring it back to the beginning. I'm not sure if you can do that while it's still live streaming.
I know you can on YouTube. I'm not sure about Facebook.
But if you go over to YouTube right now, you can actually watch it from the beginning, and you wouldn't have missed anything. And if you still want to put your questions in the feed for us, we'd be more than happy to answer those. I do get notifications when people ask me questions, even when it's over. So please feel free. Don't feel like you missed anything.
And then Deborah on Facebook says, love these shows.
Thank you, Deborah. Appreciate it. We love that you watch us every week. Thank you so much.
And Patty asks, are there interest rates as low as 2.25?
There are. There are. So, this week I've been quoting quite a few 15-year fixed rates at 0 points at 2.375. One of the things that we have talked about quite a few times in past shows was kind of that new bait and switch where you're hearing these really low interest rates, they're being advertised on commercials, and when you actually call up to find out whether or not you qualify for that rate, there's typically points involved to buy that rate down to that number. But 2.25 is absolutely not unheard of. That is more of a shorter term. That's more of a 15-year or 10-year fixed, maybe with a small amount of points being added in for that rate. You're absolutely not going to get that 30-year fixed at that rate right now without paying some points, but it is absolutely doable to get there. Do I suggest that you pay the points? Probably not, unless you absolutely have to. So we do have loan programs where you're trying to cash out. There's just no option, to pay the points. You've got a really low credit score. There's no option but to pay the points because you are a more risky borrower, and they are going to add those on to those rates. What's some other reasons? Where are you seeing points really come up, Heidi, where we just can't get past them? Investment?
Yeah. Investment properties, sometimes condos and cash out, property types.
Yeah.
Definitely I'm seeing that where they really just need to get to the rate they want to be at, and based on more risky property types, multiple units, condos, stuff like that, then yeah, they're going to pay the points. And if it works out, there's not too many months where you're recouping it. Yes, I recommend you pay the points. But again, and we've said it a million times, right? Everyone's scenario is individual. So it's very hard to say whether you should or should not pay points. But I have seen some insane points quoted for someone that's just not going to recoup it in any reasonable amount of time. So in the end, yes, the rate sounds amazing, but you're not saving anything.
Right. Yeah, I had a consultation with somebody yesterday where I went through the points that were on the estimate that they received, and the interest rate was phenomenal. I mean, it truly, it was like 1.99 or something. I mean, it was exciting. I mean, 1.99 is still 2%, but you see that one and you're so excited. And we went through those points, and it was going to take about, I want to say 126 months to make back the actual money spent to get to that interest rate. And I've had somewhere that, it's going to take 74 months, and I've had some that are going to take 62 months. Here's the thing, is that we all have a plan when we first get started. And I'm going to give you a personal scenario that I know Heidi is going to fall out of her chair right now. So I just recently finally refinanced my house, and I thought I did, finally took care of myself, said, I know I'm busy, but I've got to do this. Everybody else is doing it. I've got to do this. I have to get my family taken care of. So I finally jumped in and I did it, and I actually brought in money to get my loan balance down to the 510 400. So I was getting a better interest rate than the high balance conforming. And then a week later, all of a sudden, high balance conforming changed to 548. So I wouldn't have had to bring in quite as much in cash. So that was fun. Number two, I just completely remodeled my house. And mind you, we've lived there for 5 years, bought it 5 years ago, and lived through the 1982 stuff. And finally got to the point where I said, okay, it's time. We're going to remodel this house. And I put more money into it than I could ever get back out. But it was because we were going to live there forever. And I brought the money in on the mortgage to bring the mortgage balance down to get a payment that was really fantastic because we're going to live there forever. And then I got my first fine from the HOA for my RV being parked outside because we left it there for 2 days while we unloaded it and loaded it. And then I got my second fine from the HOA. And now I'm trying to just install a patio cover, and they just told me no. And I'm pretty much ready to sell my house and move. So, we all think when we do something, this is it. This is the last house. We're not moving. We're not changing. We're not going into something else. We're never leaving. This is the last loan I'm going to ever do. And if I would have paid a bunch of points and then decided I'm going to turn around and sell my house, I would have been out all of that money. It would have literally been a complete waste. I mean, I'm already at a waste because number one, I still paid closing costs to do the refi. I still just did all of the renovations. And let's face it, right now with where inventory's at, I could have probably sold my house for the exact same price with no renovations at all, because anybody that can just get a house somewhere right now is paying for it, right? Lives change, and they change fast, and they change overnight. My RV, I'm sorry, is more important than my house. So I've got to get a house that can take my RV. But, I mean, it's, that's what our family's doing, and it's where Zeke is at, and it's so good for him to travel. And how do you not bring your RV home to load it and unload it after a trip? I get a letter that says, well, you can, we can give you permission to have it there for 48 hours, but we need prior written consent first. I don't know when I'm going where. I don't know when that's happening. I don't have time to write you a letter and say, would it be okay if me and my family have my RV at my house next weekend so that we could go on a trip? It just doesn't work that way, right? No. So
But I bought my house, right? My last one.
Yep.
And we were going to live there forever.
Of course.
I put 25% down, pulled money out of my retirement, right? I was all in.
Yep. Never leaving. And you left.
I lived there for 13 months.
You did.
And, and then we moved out of state. So, like you're saying, you never know. You have these goals, right? And we did. This was a dream home, had everything we wanted, great area, perfect. So I said, I'm going to pull money out of my retirement. Taxes are very costly. And we lived there for 13 months.
Yep. It does happen. And so, the moral of the story is, obviously there's going to be people that are pulling cash out, and the only way to get the rate is to pay the points. There's going to be people pulling cash out on investment properties, on condos, things that are a little bit more risky where the pricing does go up and it does get more expensive to do the loan. And we don't have a choice but to charge the points to get you what you need. But if you can at all avoid those points, do not pay them. Do not. That's my story of the day.
Yes, I agree.
Aunt Pam has joined us on YouTube. She says, hi, all. Have no fear. Aunt Pam is here.
Love it. Thank you, Aunt Pam. You're a little late, but that's okay. We'll take it. That is one more view for my YouTube. Everybody listening, guys, please make sure you guys give us a thumbs up on the video. If you guys do enjoy this on Facebook, please do the same thing. Give us a like on there. Please subscribe to the channel so that you guys know when we're on live. It's every Wednesday. We're live at 5 on YouTube, Facebook, and Twitch. Remember, guys, we've got a lot of people that are actually making comments, but you can only see those comments on the feed that you're on. YouTube does seem to have more people watching, so that's probably the better avenue to go if you like to see those comments and you want to piggyback off of what other people are saying. But you guys can watch us on Twitch, on Facebook. All you've got to do is search for Mortgage Mom Radio, and you guys can subscribe to that channel. Click that notification bell and make sure you hit all so that you do know that we are live. The other thing is we're uploading these homebuyer workshops once a week. So if you want to make sure you know when a new one has been posted, that will also let you know when you go ahead and subscribe to the channel. And then please, please, please share our show. The more shares that we get, the more people that are going to watch. And this really does help us out quite a bit. Totally 100% honesty. We are bringing you guys live education, advice. We're trying to make sure that everybody gets what they need. They have the information that they need. They become homeowners. They buy a house. They refinance their house. They save money. And, in turn, we're hoping that we have people call us and, that we can do a loan for you. And, that is how we make our money. So please don't hesitate to reach out, call the office, get on my calendar, get on Heidi's calendar, talk to Carrie if you're, impatient, you don't want to wait for me. Obviously, I'm not always available same day when you call in, but Carrie is absolutely phenomenal. Everybody on the team, Larry's phenomenal. They're all great. But call the office. It's 844-935-3634. So, Matt, I can see you shaking your head over there, and I can't see everything going on.
Yep.
So what do you got?
We've got a question over on YouTube from Abdul.
All right.
He says, hi, what if you buy a house and a year later there's a recession and the value of your house drops by half?
Yeah. So I actually gave a really great scenario last week in my Homebuyer Workshop, Abdul. So go to my 2021 workshop, watch unit number 2, and I actually gave you a really, really great scenario in there. And I gave an actual story from a client that I'm helping today. And she owned a home, recession hit back in 2009, I believe it was. And she still would have benefited having owned the home, held on to it, made payments, not walked away. She still would have been in a fantastic situation. So that would actually be a really great one for you to watch. And anybody else that is listening, if you guys didn't hear the story last week, you guys can always go back and watch that episode. Again, it's in our folders. We have a folder, right, Matt? How's that exactly work? You're handling my YouTube. So
Well, the most recently uploaded videos, which that would be one of them, is right at the top of the feed. But then if you go to playlists and look for 2021 Homebuyer Workshops, you'll find all the videos as they're being posted.
Yeah, but to give you just a really quick kind of explanation, if you think about all of the years of monthly payments that she would have made and how much that would have actually brought her mortgage balance down, all of the years of property taxes and interest that she would have written off to make her tax returns either less expensive of what she owed or a bigger refund of what she would have gotten back, at the end of the day, she is far, far, far behind of having actually sold the home and not held onto it. And where property values are at today, they're actually right back at where she was when she left off. So it's never, ever, ever a bad time to buy. There's just always a bad time to sell. And so that's kind of the moral of the story and the fastest information I can give you right now here at the end of the show. But again, go back to Unit 2, Homebuyer Workshop 2021, Unit 2. Watch it, listen to it, and you'll understand it a little bit more. And if you want to talk to me one-on-one, give my office a call and get on my calendar, and we'll talk. We'll go through it together, and we'll talk a little bit more in depth about that. So that was a great question. See, I love it. Anybody listening to us on Saturday morning, they need to watch us live and put those questions in the feed. We want more questions. Try to stump me.
I'll add to that, Abdul. So I recently purchased my new home, right, in Arizona. I did buy probably a little over market value. I loved the home. It was everything everyone in my family wanted, right? Trying to satisfy everyone. The market has gone down slightly. I predict it will go down where I bought because I did even buy over market value. However, the payments are very comfortable for me and my family. The payments that I'm making today on my home are less than the rents for a house half the size of mine. And I have a tax write-off. So my answer to that is, if you can afford the payments, you have the home you want, and you have a tax write-off, then you're still sitting in a very great place because no matter what, the market will correct and you will gain your equity back. So you are still in a much better position than paying someone else for them to pay off their home.
Yeah, no, absolutely. I agree with that, Heidi. And with that, I have to wrap up the show for Saturday morning, but we're going to stay here obviously for Mortgage Mom After Dark. So all of you out there that are listening Saturday morning that did not tune in to YouTube live at 5 on Wednesday, you guys got to go. If you want to hear more of this, you want to hear more about what we're talking about, you got to go over to YouTube. You got to watch our show from Wednesday, which is what aired today on air. And I want to give a big shout out to our brothers-in-law that are coming up right behind us. They mention us every single week, and it is so hard because we do this live. So without actually putting something in front of me that says, don't forget the brothers-in-law, don't forget the brothers-in-law, I totally forget, and it's not because I mean to. It's just, we're live, and we're all of a sudden we got 2 minutes left. It's like, the show's got to wrap up. We got to go. But brothers-in-law, you guys are awesome. Thank you so much for being on Go Country and watching our show. And everybody out there that is listening Saturday morning, stay tuned for them. If you guys want to hear what we have more to say on Mortgage Mom Radio, got to go to YouTube, got to go to Facebook, and watch our After Dark piece. So we hope you guys all have a fantastic weekend. We'll be back next week live on Wednesday at 5 on YouTube. Bye-bye.
Bye. Have a great week.
And now we're back to Mortgage Mom After Dark. Woohoo! This is where the bras get to come off and we get to go nuts. No, I'm just kidding.
Oh, real quick, Abdul on YouTube says thank you.
Oh, you're very welcome. I thought I saw something. Okay, my eyes are bad. I'm old.
Oh,
not going to lie. I saw something going back and forth with Mom.
Dad asked what Twitch was. I said, I'll explain it later.
Gotcha.
And then Aunt Pam said, get with it, Tommy.
Dad, Twitch is when the kids play their video games, they use Twitch to record what they're doing and to send it out live stream. So it's kind of what we're doing on YouTube with video, but they're actually recording themselves play video games. So Mikey does it all the time. It's all gamers. I'm hoping one day we're going to get a gamer to call us to do a loan. And we don't have the real T-Bone on today watching us, but I know he is one of our followers. He's watched us before. And I actually kind of stalked him for a minute. And I actually watched, like, because it shows up on my side.
Yeah.
You know, real T-Bone's on live right now. So I, like, go over to Twitch and I watch him like, he's a real guy.
He's a real person.
And he's an adult. This is awesome. We're going to get this guy a loan.
Oh my God.
It's gonna happen. But if anybody else has any questions, you guys, please put them in the feed. We're more than happy to answer them for you. Really, truly, that's what we want to do. We're here to help. We want to get you guys all into homes. Abdul, please don't. If you don't own a home right now, do not be scared to pull the trigger. Honestly, go back to that show that I did last week and actually just watch the workshop video, and it will give you more information. You know, a better understanding of the benefit of homeownership. So. And then Matt, I think I can't read it again. I'm blind.
Oh, yep, we have another one from Abdul. I'm wondering what I can get qualified for and how much down payment I need. I make around $3,000 a month.
Okay, so it really depends on you and your situation. How much debt do you have monthly? You know, what are you? Where's your credit score at? So it's something that we'd really have to talk about. Maybe it's hard for you to do it by yourself, and maybe you need a co-signer. We're going to take you through all of the different pieces. We're going to talk about you, what your debts are, how much you're earning, how much money do you have down payment, and then we're going to figure out what's the best loan program and how much can you qualify for. I can't tell you. There's way too many pieces of that puzzle. You might only make $3,000 a month, but you might have $100,000 down payment. That's a totally different borrower than a zero down with $3,000 a month. Totally different borrower than zero down, $3,000 a month, and $1,500 in monthly debts and car loans and car payments. So really the best thing to do would be to call me and let's talk and kind of figure out your situation. Let's find out, where do you want to be? What price do you want to buy? And then, you know, maybe if you need a cosigner, maybe you got a buddy that wants to buy with you. Maybe you've got a family member that wants to buy with you. And, you know, you guys all live together and buy it together. And it's absolutely not unheard of right now.
And Heather has joined us on YouTube.
All right, Heather, you're about an hour late, but that's all good. We appreciate you watching. Thank you so much. And if all you guys know, Heather's a good friend of mine, so I get to make fun of her.
Hi, Heather.
She says hi, guys.
Right, exactly. So anything else, Heidi, from this week that you feel is important that we let people know? Anything that's come up that you're like, oh my goodness? LOL, working it, ladies. Well, we're trying. I mean, I don't know if you're talking to me or if you're working it, but
Right?
Stay off the pole, Heather. Stay off the pole.
and Heather says, hi, Heidi.
I love it.
That's good.
I love it. Hey, like I said, it's Mortgage Mom After Dark. We get to say what we want. So I think I actually, by accident, dropped an F-bomb last week. So if you guys want to go back and watch that one, you got to actually watch the live stream version, and then you got to wait all the way to the end. But I definitely did do that.
You're going to say accidentally? Really?
No.
I know.
I try to censor myself. You know what I mean? I try, it's Mortgage Mom Radio. We got to be good. We got to be good.
That's 2021.
Right? So anything this week that came up that was funny, anything that irritated you that we should let people know, like, please don't do this?
Yes.
Oh, cool. Give it to us.
Okay. So when I ask for stuff, I'll censor myself. I'm not doing it to be irritating. I'm not doing it because I want to look at more documents. I'm doing it because, one, I don't have them. Two, I need them. Three, if you want a loan, you have to give them to me.
Right. Yes, we do get that a lot. We get that a lot. So
A lot.
Yeah, so I'm going to explain that in a little bit more in depth. So
Yeah.
you talk to me, we figure out, yes, you want to move forward with your loan. I send you, the link to apply, give you a list of items that I would need from you, and you're going to do your best to do your application online and to upload all of those documents that I told you that I needed to have. Second step of the puzzle is that it gets to Heidi, and Heidi actually goes through all of the paperwork to make sure that everything that we do need in your file is there before we can get you submitted to underwriting. If you did not give us something that is really necessary for your loan, Heidi's going to send you an email and she's going to say, hey, I'm missing, and it's not, hey, it's actually a very formal email, but, I'm missing. Please send me, and she's got it all put together for you. And then we get emails back that say, I already sent you that. Okay, I want to say a really dirty word right now, but I'm going to censor myself. No, you didn't. we don't ask to, just because we want extra paperwork, trust me. We don't want the extra paperwork. We don't have time for it. We have, we want it to be as smooth and fast as absolutely possible. And if she's asking you for it, we didn't get it. So either you might have uploaded it, and thank you very much, but it didn't upload right, or it didn't come through, or you gave us 1 page out of, all of the rest of 7. Let me just clue you in. If it's a bank statement and it says on the top of that bank statement, page 1 of 6, and page 6 is empty, we need it. If that bank statement gets mailed to you and you're old school and you scan your bank statement, you don't log in online and do online banking and download the PDF, and it prints front and back, right? What's that called, Matt? When it
Double-sided.
Double-sided.
Oh.
Thank you, two-sided, whatever. But if it prints that way and you guys scan us pages 1, 3, 5, and we need 2, 4, and 6. So just please, we're not doing it to be mean. We're not doing it to mess with you. We're not doing it because you didn't do it right the first time. But if we're asking you for that information, we need to have it. And it is really frustrating when people come back and be like, I already sent it to you.
Even that page intentionally left blank page.
Right. But what I love is like, I already sent that to you. Okay. I appreciate that you sent it to us, or you thought you did, or you tried, or that you uploaded it. We're not arguing with you. We're not. I promise we are not. But if we didn't get it on our side, we still need to have it. So please just try again.
Well,
Yeah, and the most famous part is, but I'm not refinancing that property. You don't seem to understand. No, I do. But you own 6 properties.
Right.
So I need the information on all 6 properties, even though you're only refinancing 1. Right. So when I send you the email, I will say, send me this on, and normally I will actually put the addresses of the stuff I'm missing for which address. If I did not get it on any of them, they will actually say, please send this on all properties owned by you.
Right.
It doesn't say all properties financed by you. It says all properties owned.
Right.
It's okay if you don't have a mortgage. I still need all the other stuff.
Right.
So, it's very hard, and I understand. And then what happens is you get frustrated that I keep asking you for the same things. And you are correct, because I have not gotten any of those things.
Right.
So
yeah. No, I mean it's and there is a lot, and we are asking for everything. Yes. We're asking for everything, including your polka dotted underwear. We want to know if you like stripes or polka dots. Like it is really, and we are asking.
I want
you
your
for
first
everything.
one, maybe your second if the first wasn't quite there.
Right.
So yes, we understand.
Yes, we absolutely do. But if we ask you for it, we didn't get it. So please just send it again. Really, we appreciate it. And maybe you don't understand. Maybe you think you did send us what we needed and we keep asking you for the same thing. Just pick up the phone and call and say, hey, I'm pretty sure I sent you that. This is what I sent. And then we can explain, oh, no, that isn't what we needed. We needed actually this. Oh, okay. And we try to do that, too. When we see that you've uploaded the same item 3 times, we're like, okay, we better call and talk about what it is exactly that we're looking for. So
we've got a few comments to catch up on over here. Cool. Heather on YouTube was backing you up, said, people, please, when we ask for a bank statement, please don't send us a screenshot of your bank account.
Especially not a screenshot from your cell phone.
Right.
That one doesn't work, ever.
No screenshots.
Yeah.
Abdul asks, where is your office located?
All right. Well, we are in Santa Clarita, California. We are not meeting with people in person right now due to the... We're going to leave it at that so that we don't get censored off of YouTube and Facebook and everywhere else. But we are local in California and working with people all over the country. So everything that we do is online, over the phone, and we'll get you done. It's not really needed to come in, and see us. So we'll get you done.
And then Norma on YouTube asks for options for refinancing if we have a dismissed bankruptcy in 2018.
Ooh, Okay, so we've got, it depends on the month in 18, because we're at that point where we're counting down, right, Heidi?
Right.
And it depends on the kind of bankruptcy. So whether it was a 7 or whether it was a 13, it depends on the type of bankruptcy that you had. But if we were in 18, we've got 19, 20, 21. So we're at 3 years right now, which means that there's actually quite a few options, but it depends on what month. It depends on whether it was Chapter 7, whether it was Chapter 13. Where's your credit score today? Hey, Norma, best thing to do is give us a call and get on the calendar and talk to me or talk to Heidi or talk to Carrie and let us help you, and we'll figure out what the options are. But there are definitely options there for sure. You are not out of a loan at the moment.
Right. And then Helen on Facebook says, I am working with Carrie and she has been amazing. Almost ready to pull the trigger, just deciding between buying primary or investment, half price out of California first. How long do I have to live on a primary and rent it out until I can apply for a second loan?
Ooh, that's a great question. And Helen, I know exactly who you are. I see your middle name. I see your middle name behind you, and not your actual last name. And Carrie is amazing. And I believe that you actually called in on one day that I took off over the holidays after you and I had actually talked for a year. But I would have never put you with Carrie if she did not have it together and didn't know what she was doing or what she was talking about. I love the girl so much. It's not even funny. Maybe more than Heidi. Don't tell her. Just kidding. I'm just kidding. I'm kidding, Heidi. I'm kidding.
Long enough.
I'm kidding. Anyway, so when you buy a property and you're doing it as your primary residence, your intent needs to be that you are planning to occupy for 12 months. Okay? Things happen, just like we said. I just did my refinance, me personally, 3 months ago. And I am now trying to find a house that will accommodate my RV. If I decide to buy another house, I'm obviously not going to be in that house for 12 months, which is what I agreed to when I did the loan. Things happen. My intent was there. I had no plans to go anywhere else. Nobody's going to come after me because things changed, obviously. We can only do, the guideline states, one owner-occupied loan within a 12-month period. Now, we can make an exception after 6 months to do a second owner-occupied loan. So it would really depend on what the situation was. People will do an owner-occupied loan and all of a sudden they get transferred. Do an owner-occupied loan, all of a sudden they get pregnant. Do an owner-occupied loan, all of a sudden their HOA says, screw your RV, get out of here. So it just depends on what the situation is, and obviously, but it's really, think 6 months if the situation makes sense, that we could do owner-occupied again.
And then over on YouTube, Abdul says he works in Santa Clarita, so he's nearby.
Sweet.
And also says, I don't see why it's a good time to buy because rates are so low, but the prices are so high, so I really don't see the benefit. I'm not desperate to buy because I'm living rent-free at the moment.
Okay. So living rent-free at the moment is fantastic. Good for you. Most people don't actually get to take advantage of that. I know I never did, and some do. My son Manny does, but, and Matt, you lived in Dad's basement for a while. Let's be honest, for a long time. But, you have that benefit of being able to wait and watch and not be in a hurry and not be in a rush, but there's a lot of people that don't. And I don't know what your income is. Actually, I think you told us on the earlier in the show. But, somebody that is making $70,000, $80,000 a year, which is very, very common, especially when you have two people on a loan. You've got two at 40, which is pretty close to minimum wage these days. They're going to owe some money on taxes. And if they don't have that write-off, they're going to be paying money instead of getting money back. And so, they're also not securing their future. If they have children, they might be getting kicked out of a rental and having to move when their kids are already settled into a certain school. There's a lot of reasons that you buy a home that you don't worry about where the market value is at today. Also, the fact that interest rates are at historic lows, as low as they can possibly be right now. When property values drop and interest rates go up, that same monthly mortgage payment is what you'll pay again, even when the property value is lower. So it's about making sure that what you're buying is affordable, you're getting into what you're budgeting for, that you're comfortable with where you are. It's the safety, it's the security, it's the write-offs, it's the future value. Property values might be up, they're going to come back down, and they're going to go back up again, and they're going to keep going above where they left off the time before. So real estate is a long haul investment. It is something that you don't buy thinking that it's going to be a quick flip. In your mind, if you think that you're going to hold on to it for a very long time, then once again, I wouldn't worry about where property values are. I'd worry about what's affordable for you. Can you afford what you're buying? Does it make sense for you? And at the end of the day, is it going to actually benefit you to have those write-offs? And probably. So, and I love these questions. I mean, he's not arguing with us in any way. These are things that are being asked of me on a daily basis on almost every phone consult that I do. And Heidi, you've had to take a couple of those consults for me. I'm sure that you're getting these same questions, right?
I absolutely am. And, and that's why I always say is it's to each individual, right? Is Abdul's living rent free. So there's a difference there versus someone paying
rent
$2,000, $2,500, $3,200 in rent, right?
Oh, and if you want to fall over,
lives in Santa Clarita.
If you want to fall over right now, a 2-bedroom apartment on average in Santa Clarita, which, I mean, obviously we've got people watching us all over the country. We're licensed in many different states. Santa Clarita, to give you guys all an idea, is a pretty affordable area for LA County. We're very, very north LA County. We're not in LA. We're not by far the least expensive area of LA County, but we are a suburb of, and actually one of the more affordable, more blue collar areas, right? And a 2-bedroom apartment on average right now is $2,800 a month. My $500,000 mortgage with my property taxes and insurance is $2,800 a month. So hopefully maybe that resonates a little bit, right?
Right.
And that obviously, not everybody's going to get that payment because they don't have equity or they have zero down payment, and then there's mortgage insurance. But, when you start factoring in tax write-offs and property tax write-offs and interest write-offs and, everywhere that you're at, you could probably afford $3,500 a month versus $2,800 for rent, and you own a house, and nobody can ever tell you to leave.
Exactly. So everyone has a different scenario, right? If you live for free, you can save your money, you can maybe put more down, put yourself in a better situation, then maybe now is not the right time to buy.
Right.
But if you're spending all that money on rent, then now might be the best time for you to buy. Get in at a low interest rate, get in a low down payment, and own that home that, yes, it may fluctuate, but you've got an amazing interest rate, you can afford the payment, and it's yours.
Right. Yeah.
So that's why I always say it's so hard to say for one versus the other, should I buy, should I not? Well, everyone's scenario is different.
Yeah. Oh, absolutely. Well, with that, I think unless anybody else has any other questions for the day, we are 15 minutes over our hour. We did do our little Mortgage Mom After Dark. If you guys enjoyed this, you guys liked it, please give us those thumbs up, whether it's YouTube or Facebook. Please subscribe to the channels. Please like our page. Please share it with your friends. Put it out on Facebook. Put it wherever you can. It really means a lot to us, like I said earlier in the show, and being totally honest and people understanding. We're bringing you this education. We're doing these shows every week. We're busting our butts to make sure that you guys have everything that you need to have to make informed decisions. And our hope is that it's going to bring us a little bit of business back in return. So the more that you guys can help us to get our show out there, the more that we can get that algorithm busy, the more that we can get YouTube to start telling people to watch it. What is it called? They recommend, hey, let's recommend the show. It seems like something you'd watch. We'd just absolutely appreciate it. So please do what you can. We'll be back next Wednesday. We're going to be live at 5 on Wednesday like always. And in the meantime, you guys have any questions at all, give us a call. It's 844-935-3634. And text the word mom. Text the word mom to 36260. Get that phone app. It has got so much cool stuff on it. Everything you guys could need to start figuring out where you want to go, what calculators you need, how to email us, how to watch our YouTube, everything you could possibly think of, and apply for your loan even through that phone app. So we hope you guys all have a fantastic rest of your week. You have a wonderful weekend, and we'll be back on Wednesday.
Bye.
See you later. Bye-bye.